Bajaj Auto Q1 FY14 results were in line with expectations on the revenue front as well as on the bottom line front. Talking about their net sales were at around 49.1 billion as compared to around 48.6 billion in Q1 FY13 and around 47.5 billion in Q4 FY13. The volumes were down 9.2% on a Y-on-Y basis, mainly led by fall in both export as well as domestic markets. Sharper fall was seen in export markets, where we saw a 12.8% decline on Y-on-Y basis. However, this was more than offset by a sharp jump of around 11.2% in net realizations. The jump in realizations is on back of factors such as steep rupee depreciation and a favorable product mix, whereby contribution of three-wheelers have increased substantially in this quarter. Talking about operating margins, they were at 18.5% as compared to our expectations of around 18.1%. They are better than our as well as street expectations, and this is considering that the company has reported a notional forex loss. Setting that apart, the margins are much ahead of what we were expecting, and the surprise has mainly come in the form of better gross margins. This is again, the benefits are mainly driven by the steep rupee depreciation that have been seen, and which led to sharp jump in export realizations. Otherwise, the numbers were in line, except for the fact that other income was much lower than what we were expecting. They were at 1.8 billion as compared to around 2.1 billion of our expectations and 2.4 billion reported in Q4. Net profit was at 7.4 billion as compared to 7.2 billion in Q1 FY13 and around 7.7 billion in Q4 FY13. Going ahead, what we are expecting is that two-wheeler volumes are likely to be muted, especially in the domestic market, given the fact that fuel prices are on upward trajectory, consumer sentiment is at low. Only revival could be in the second half, when the benefits of normal monsoons could mean that the rural demand is strong. However, we feel that Hero MotoCorp will be a better beneficiary as compared to Bajaj Auto, and international markets are also not doing well for Bajaj Auto. We feel that the valuation upsides are limited from the current levels, and hence we will maintain our market performer rating on the stock. Thank you.